Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. We are in the midweek of the trading session and three major factors that will drive the markets from here on. First, after yesterday's expiry-related swings, which brought the markets down, today also we'll be watching out whether or not the broader markets fare, given that yesterday we did see a smart rebound, which came in from both the small caps and mid caps, which aided any, and which capped any downside on the Nifty as well. Second, the much-awaited U.S. Federal Reserve's December meeting will be watched out. Now, this will be the last policy decision of this year, and which is due later tonight. But to understand how the trade setup looks like, let's quickly get on board with the technical expert of the show. Joining me is Ajit Mishra of Religare Broking. Ajit, good morning. Yesterday, we did see Nifty extending loss for the second day. But yes, of course, on the back of the expiry day volatility, but the market breadth, that turned in favor. 2:1 advanced decline ratio. And what can we watch out next? We have the Fed outcome, which is due tonight. But on the levels front, what are you watching out for?
Yeah, good morning, Lavisha. So, Lavisha, it seems like a roller coaster ride. Means on Friday, post the RBI event, we ended on a very strong note. But Monday, it turned out to be a complete reversal. Means we not only reversed the Friday's gains, but also slipped below the crucial support of the short-term moving averages of 20 EMA, which is the first line of defense, and also penetrated the declining trend line of a rising channel. Yesterday, we saw the extension of the same, though, after the initial decline, we saw that index broader markets recovered. But post this decline, Lavisha, I believe that the consolidation that we were seeing earlier means after every up move, markets spend some time in a range. So earlier it was anticipated that we were trading closer to the record highs and it might be more of time-wise correction. But it turned out to be otherwise, and now we are seeing that it's more of price-wise also. Means we are again drifting towards the key support area of 25, 650, 700 zone. So yesterday we have tested that mark and witnessed a rebound. The good part is banking is still holding strong. So private banking majors like HDFC, Kotak, Axis, they are maintaining this strong ground. Plus, though we are seeing a bit of a profit taking in IT majors, but it seems like that this time around, this move is not going to fizzle out completely. The challenging part, Lavisha, is more of broader market underperformance. Though yesterday we saw a very swift rebound, but if you see, the kind of pressure that we are seeing in, especially in small cap space, it's the benchmark index is actually not reflecting the true picture of what's going on, on the broader front. So as of now, I believe that consolidation is more likely in the index, and on the stock specific front, one should be slightly more cautious because the EMS names like you were mentioning about Keynes, Dixon, which are now seeing bit of a recovery or rebound. Stock like Indigo, which was in news for negative reason. So these kind of move wherein these very stable or strong fundamentally expected counters witness such kind of carnage, then it becomes difficult for market to maintain the sanity. And this is what we are seeing in the broader market as of now. So the focus should be more on index heavyweights, large cap names, and stocks which are holding comparatively stronger in a current market scenario. So as of now, it's in wait and watch. When it comes to the index, it should be more of consolidation buys with 25,650 positionally being the key support area. On the higher side, 26,100 to 200 will be the strong resistance zone. Meanwhile, sticks to the selective counters, avoid aggressive positioning, and wait for market to stabilize a bit.
Okay, all right. Avoid aggressive positioning in this market. But yes, let's talk about Nifty IT index. It was one of the top sectoral underperformers yesterday. But of course, the IT stocks have seen quite a bit of attraction so far this month. Once again, Ajit. What can we watch out next? I mean, yesterday it was some temporary weakness, or can we see a sustained recovery ahead?
Yes, so Lavisha, it's been almost a year now that we were seeing this kind of underperformance from the IT pack, and off late we started seeing decent traction. Means last week IT index was among the top performing sector, on the sectoral front, and we expect this marginal profit taking consolidation to continue every now and then. The good part is that the Nifty IT index still have room on higher side, means closer to around 39,500 zone is what we are eyeing. It's currently quoting at 38,130 area. and we have multiple supports around 3700, 37,500, 36,750 zone. So one should continue with buy on this approach, but yeah, be selective. Stock like HCL Tech, Persistent, Coforge, and then we have stock like Tech Mahindra. So these are some of the names which are outperforming within the sector. So that should be the focus point during this correction or consolidation.
Okay, all right. Ajit, let's shift focus and talk about the consumer durables index because that did well yesterday. It snapped its 6-day losing streak. But from this basket, anything that you're finding attractive at the current levels?
See, Titan definitely, in the consumer basket is where we are seeing stability. Then other names, we are still seeing very mixed trend. It's more of consolidations, just a respite. But otherwise, the trend is likely to remain sideways to slightly negative. So aggressive positioning, especially from that short-term, time horizon, is something that you should refer in.
Okay, okay. Any picks from this particular space, consumer durables, Ajit?
Consumer durables, see, we are seeing Havells, holding strong means we are very closer to the strong support area. And here we are seeing that possibility of a rebound towards 1520 area with very strong base around 1400 marks. So that is one pick. Then Voltas also is trying to stabilize, but we are still not seeing very decisive action. So let's the stock surpass this 1400 mark decisively, then you can look for long positions.
Okay, all right. Havells and all of the stocks we need to watch out for. But yes, the first rates coming on your screen with the Nifty has opened flat, but with a positive bias, so to say. It's holding above that 25,850 levels as of now. On the other hand, if you look at Sensex is down. Mid cap and small cap index, both of them have been showcasing a gain of about 0.1%. But small cap index, if you look at that, it's turned again flat with a negative bias as of now. Ajit, I'll come to you. I mean, small caps yesterday saw a turnaround after 6 straight days. Right now, it started off flat, but can we see a sustained recovery ahead from this particular index?
So that's the major concern, Lavisha, because we were seeing when the markets were trading at the record highs, we were the small cap index was drifting gradually lower towards 52-week low. And yesterday, after testing the crucial support of 100 weeks of exponential moving average, we saw this rebound in the index. So yes, rebound is likely, but how many stocks are going to participate in this rebound is the key question. Means it's a very selective participation that we are seeing within the small cap space. And 17,800, 18,000 zone is a very strong hurdle. So we are just 800 points away from that area. Prior to that, also we have multiple resistance to watch out for. So as of now, refrain from any aggressive positioning in the small cap space. Those who are stuck at the higher levels, utilize this recovery to reduce your overexposure or avoid adding to your loss-making position, especially in the small cap.
Okay, all right. That's the view coming in for Nifty small cap. Let's take one stock in focus, that is your Tata Power. The stock is doing well today, given that the company has announced that it will be commissioning 400 kilowatt of Koteshwar Rishikesh transmission line, and the new line will be channeling clean and renewable energy to the states of Uttarakhand, Haryana, Punjab, UP, Himachal Pradesh, and Rajasthan itself. Today, the stock is showcasing a gain of about 0.5%. Ajit, how does the stock look like, however? I mean, it's consolidating around that 400 odd levels.
That's true. In fact, it's been almost 8 months now that we are seeing this range, continuing roughly around 370 on the lower side, 420 on the higher side. So after retesting the lower band, we are seeing again an attempt of a rebound. 385, 390 is the zone basically where it might face the first resistance and then gradually towards the upper band. So as of now, definitely you can stay put with 370 as a stop loss, with 390 as a first target, and then around 410.
Okay, all right. 390 could be the next target for Tata Power that we need to watch out for. All right, let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Shweta Naidu. She's saying that she's been holding Mazagon Dock at about 2700 odd levels, and she's asking whether or not she should shift to Bharat Electronics at the current price. 27, of course, the stock has, slipped below her buying price where it is about at 2490. Ajit, what would you suggest? Time to quit and move to Bharat Electronics?
See, no doubt that Bharat Electronics has outperformed within the defense basket big time, and but as of now, we are seeing all these stocks within the defense basket witnessing pressure, including Bharat Electronics. Majgaon is comparatively better, means the downside seems capped, from the current area. Though we are still trading below all the major averages, but on the weekly charts, level close to around 2250, 2260 is a zone basically where we have multiple supports. BEL on the other hand, may witness further decline, let's say towards this level of around 360. So the downside in percentage term is much higher in BEL. So not at the current levels, and also if the time horizon, let's say for 1 year or two, then you can consider switching to the position. Short term looks, BA looks comparatively weaker.
Okay, all right. BL looks comparatively weaker on a short-term basis. All right, let's take another viewer query. We have Naveen who's been asking the view on Keynes technology and if any fresh entry level is advisable at the current price point. Ajit, what's your view? I mean, yesterday we did see a sharp run up, 14% gains, but today once again the stock is staying a bit, taking a knock off, about nearly a percent decline coming in from there. What's your view? And of course, any fresh entry levels would you advise Naveen at this point of time?
Lavisha, we usually recommend to avoid stocks which are in news for any reason, means positive, negative, because the volatility is very difficult to handle. Because at that point of time, there's hardly any support or resistance that works for the stock. Though on the weekly charts, the support close to around 3750 was played out well for Keynes, from where we are seeing this rebound. And possibly this rebound may extend towards, let's say, 4800 to 5000 levels also. But seeing the volatility, is very difficult to maintain stop losses in such kind of counters. So while the index or stocks is offering much better stability and consistency in the trend with a better risk reward ratio, I would suggest stocks which are in news, be it Keynes, Indigo, let them stabilize, let them form some base, and then with a better risk reward, something that you should consider. So as of now, it's an avoid.
Okay, it's an avoid for Keynes technology at the current levels then. All right, let's move on and take another viewer query. We have Shweta Naidu who's been asking the view on PFC and RVNL because she's seeing a loss of about 15% in both of these counters, and she's asking which is good to hold or should she book losses in both of these counters. Of course, both of these PFC and RVNL are at nearly this year's low price point itself. Ajit, what would you advise? Both of them are stark underperformers this year, and she's seeing about 15% loss.
So yes, in fact, see, Lavisha, the problem is that when the market mood is on a bad side, you usually see these kind of move unfolding even in the good counters like PFC. So first of all, a disclosure that we have a recommendation on the long-term basis to our clients for investment in PFC and REC. But having said that, the kind of underperformance that we are seeing from the energy basket or the power financiers, we believe that it's temporary. And considering the long-term outlook, one can definitely stay put, at least in the PFC. RVNL, like other railway counters, we are seeing gradual drift, but it's holding comparatively better. So in case if her time horizon is, let's say, for 6 months to a year, she can definitely stay put. Uh, Short term, definitely, in case if it is less than that, she can consider at least exiting partial position at current levels and utilize further dips to re-enter.
Okay, all right. Further dips can re-enter for RVNL stock. All right, let's take one stock in focus, that is your Adani Green. We've seen a block deal happening on the counter, and on the back of that, we've seen that Adani Green has been doing well, nearly 1.5% gains coming in for there. Around 2 crore shares of about 1.4% equity, worth about 2,000 crore rupees, have changed hands at a price point of about 970 rupees per share. But yes, Ajit, coming to you, Adani Green, that has also been consolidating around that 1,000 to 150, 1,050 odd levels. What would you suggest? Where does the near term go for Adani Green?
So it's a very volatile counter within the Adani group of stocks. Means though from the last few months we are seeing that this range is getting narrower, and but the stock is still struggling to hold up of the key support area of the long term averages. So one should wait for a decisive close for a week or two above 1080, 1100 mark for any fresh rebound attempt or recovery. Otherwise, the possibility of this consolidation or underperformance to continue is high. So as of now, it's an avoid. If you are stuck, the existing position, 960 should be a strict stop loss, and use recovery towards 1100, 1140 area to reduce your positions.
Okay, that's the view for Adani Green. Let's take another viewer query. We have Geetu Sandesh who's been asking the view on JSW infrastructure. Of course, in the past 1 month, we've seen that the stock has seen a decline of about 4%, and the stock has been exhibiting certain, down negative trend itself. But JSW Infra, for you, how does it look like on a technical level, Ajit?
So it's a very gradual drift, while sustaining below the first resistance area, the 20 EMA, which is placed around 272 mark. And though the major support comes around 250 to 45 mark, so which is roughly around 10% away from the current area. So avoid any fresh positioning. For existing position, any respite, we need a close about 272 mark. Then there could be an attempt of recovery towards 288, 290. So as of now, with 260 as a strict stop loss, one can continue to hold the position, but avoid averaging at current levels.
Okay, avoid averaging at the current levels for JSW Infra. Let's take another viewer query. We have Naveen who's been asking that he has been holding 1,000 internal shares at a price point of about 315 rupees per share. He's asking whether or not to hold or exit. Of course, the stock has slipped below its buying price, 291, that's where we are at. What would you suggest, Ajit? Yesterday we did see a block deal also happening on the counter.
Yes, so it's been almost 2 months now that we are seeing this gradual decline post the record highs, and now the stock is currently hovering around the critical support area, the long-term moving averages, which is placed around 288, 283 mark. So, possibility of consolidation followed by a rebound attempt is likely. So, maybe around 300, 305 is something the stock might attempt, provided it manages to hold this area. So, with 282 as a stop loss, one can continue to wait, and around 306, 308, he should reevaluate.
Okay, all right. All right. That's the view coming in for Eternal, something that we need to watch out for. Let's take another viewer query. We have Alex who's been asking the view on JSW Energy, whether or not it is a good buy when you look at the long term chart. And he's asking that, given that recently Jeffrey has also added in its India model portfolio, so what does it make sense for JSW Infra going ahead? Today also the stock is seeing some good buying interest, 3% gains coming in for the counter. Ajit, on a technical perspective, what does the near term indicate for JSW Energy?
Yeah, so it's a very critical area for JSW Energy because we are quoting around the 200 days of weekly exponential moving average, and today we are seeing a rebound. Yesterday also it was a good day with volume. So yes, a rebound attempt is likely, and if the view is long term, one can start nibbling currently at existing levels with 440, 420 being the lower base. For the entire position, 400 should be the stop loss because in case if it fails to hold that area, then probably we are set for the declining phase instead of consolidation. So yes, selective buying can be done at current levels, and one can add more around 440 area.
Okay, 440 area one can add around for JSW Energy. Let's take one stock in focus, that is your Nalco. The company did approve its proposal to select Dilip Buildcon as the mine developer and operator for its vital Potangi bauxite mines itself. But yes, today the stock is not reacting well to this news. Nearly 0.2% decline coming in for this counter. But Ajit, I mean, how does the stock look like? I mean, it has been an outperformer this year and it has seen a secular bull trend.
Exactly. So, in the metal space, some of these stocks like National Aluminium, VEDL, Hind Copper, they are holding, strongly amid this, correction and consolidation. 258, that's the critical support, the 20 days of exponential moving average base. In case if it manages to hold this area, we are set for the newer highs in days to come. So as of now, 276, 278 should be the target zone with 258 as a stop loss, and one can continue to stay put.
Okay, all right. That's the view coming in for Nalco. Let's move on and take another viewer query. We have Shweta who's been asking the view on M&M because she's bought the stock at about 2,700 and she's asking whether she should book profits or add more. Given the current price of M&M is about 3,600 rupees per share, Ajit, I mean, she's seeing nearly 30% profits at the current price point. So what would you suggest? Should she book profits or add more at the current price level?
Yeah, so in case if time horizon is long term, means over a year and more than that, then definitely she can consider adding more even at current levels because after this prolonged consolidation, around 3,400 mark, we saw the breakout and it's gradually, inching higher. So we still feel that there's more room to the upside, maybe close to around 4,000, 4,100 is something that the stock might attempt in next 3 to 6 months. So definitely he can consider adding more with the long-term time horizon.
Okay, all right. That's the view coming in for M&M. Let's take another viewer query. We have Clash, who's been asking the view on Fortis for a fresh entry at the current levels, and how does the stock look like? Of course, the stock did hit a high during in the month of October, but since then the stock has seen a little bit of a slide. It's seen a slide of about 20% or so. What would you suggest? How does the near term look like, Ajit, for Fortis Healthcare?
So yes, a very strong outperformance means roughly around from 300 to 1100 with hardly any major correction. And now we are seeing some decisive dent from the record highs of roughly around 1100 to now the long-term average is around 850, 860 mark. So possible technical rebound definitely seems prudent on chart. Maybe close to around 910, 920 is something that the stock might attempt. So with stop at let's say 840, one can look for this rebound rate. But if you are planning for any positional or long-term investment, buy partially here and wait for any dip towards let's say 800 zone to add more.
Okay, all right. 800 zone is something that we need to watch out for, and we can add more from that particular level. All right, let's move on and talk about another stock in focus, that is your Godrej Agrovet. The stock has been flat with a negative bias, but we did see that its unit, that is your Creamline Dairy, has said that they have signed an MOU with the government of Telangana to set up a dairy processing facility with an investment of about 150 crore rupees itself. Ajit, I mean, the stock has seen a sharp decline over the past 6 months. Today also the stock is now sulking in the trade with about nearly 0.3% cut. Can we expect further fall from the current levels?
Yes, so post this breakout failure in the month of July, the stock has retraced considerably in the last few months. But now we are very closer to the critical support zone. Means 550, 570 is a very strong base, and for almost 3, 4 weeks we are seeing that stock has been consolidating around that area. So probably we may see a breakout or a recovery attempt above 620, which can help the stock to inch towards 675, 680. So from the technical point of view, one can look for long position or accumulate gradually in this range of 590 to 575 with 550 as a stop loss and 600, 625 as the positional targets.
600 and 650 as a positional target for this particular counter, the Godrej Agrovet. Let's take another viewer query. We have Mrudang, who's been asking the view on Kalyan Jewellers, whether or not we can add at about 472 odd levels. Kalyan Jewellers, any particular view, any thoughts on this particular counter? Today the stock is quite flat with a positive bias.
Yes, so what we are seeing after the critical support retest of the trend line resistance or trend line support rather on the weekly charts, we are seeing this recovery. But it seems more of consolidation with a negative bias as of now, and this would only change once we reclaim the long-term averages around 520 area. So as of now, it's an avoid cause consolidation or sideways trend is more likely with strong hurdle at 590 than 510 and 520. It means every 15 20 points we have some resistance or the other, and on the downside a break below 450 can trigger next leg of the down move also. So as of now, it's an avoid for existing position. 460 should be the stop, and use any recovery towards 490 to reduce your positions.
Okay, all right. That's the view for Kalyan Jewellers. Let's take another stock in focus, that is your Swiggy. Well, the company has announced and launched its 10,000 crore rupees QIP with an indicative flow price of about set at 371 rupees per share, which is down by about 7% below its previous close. Ajit, I mean, the stock did well yesterday. Today also the stock has been holding well. But from a technical perspective, how does the near term look like?
Yeah, so it's been almost like 2 weeks now that it's been trading in this very tight range, 400, 380. Today we are seeing an attempt to break that range plus reclaim the long-term averages also. So this may result in further recovery towards let's say 420, 430 area. So with 395 as a strict stop, one can preempt this breakout and wait for the target of around 420 in the near future.
Okay, 420 in the near future. All right, just one last question before we let you go. What are your top picks? Let us know, and anything that you're finding interesting in the markets.
Yeah, so See, the important aspect is that volatility is here to stay, is what the indications are. So, stick with the quality names is something that we have been advocating to our clients also. iShare within the auto space has been holding around its record highs amid this choppiness. In fact, the entire auto basket, if you exclude few names, M&M, TVS, they all are holding strong. So, auto is something that you should definitely focus. So, with iShare, 71.76 is something that's currently quoting. So with stop at 70.60, one can look for long position at current levels with 73.50 as a positional target for iShare. At the same time, since we are seeing extreme volatility, one should refrain from aggressive positioning in sectors which were underperforming or stocks which are underperforming. But pharma, we believe, is one basket wherein we are seeing bit of stability, or at least they are not volatile as what we are seeing in the other spaces. So Sun Pharma, after this recent decline, we believe that it's a good zone to look for long position. We are retesting the short-term support area. So with stop at 1740, one can accumulate Sun Pharma at current levels with 1850, 1860 as a target zone.
Okay, all right. Those are the stocks we need to watch out for. But with that thought, we have to let you go, Ajit. Thank you so much for your time and joining us.
Thank you, Lavisha.
All right, let's take a quick check of the markets before I move on to our next guest of the show. If you look at Sensex, that's up by about 270 points. So some recovery which is taking place in the markets, given that we started off quite flat, but with a positive bias. Nifty also holding up well, 70 points gain coming in from there. 25,900 we have replaced from here. Whether or not the recovery can sustain in the second half of the trading session is something that we need to watch out for. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we will be discussing how the market has developed with our experts, and we'll also be discussing the stocks that have grabbed the headline. Until then, signing off, do stay tuned to moneycontrol.com.